still paying all my bills, my expenses and things like that.
Yep.
But I can't afford to pay somebody to keep up with this stuff. But yeah, the bookkeeping, I might overlook that because I'm so invested in being a talent, which is the part that's making me the money.
Right.
What do you suggest to the people that's probably in a similar situation?
If you in a similar situation, you it's only two things that you can ever do in business. Either you're going to have to do it yourself or you're going to have to pay somebody to do it. And so for me, I think that you have to look at bookkeeping as an investment. If I spend X, how much money will it help me generate and or keep? You're just a busy person, right? You, like you said, hey, I just made 6 figures last year. I got multiple different things that I made 6 figures, but you probably can't really tell me exactly how you made 6 figures or what avenue made you the most money. What's the core of the business? What's the thing that generated the most income? And then what did I spend to generate this income? Where did this come from? Or what expenses do I have mixed with business and personal that I could be getting rid of? These are things that a bookkeeper, and from you watching your money, you'll be able to see. You're going to have to come to the point where either you're going to put it off and it's not that important to you till it becomes important. And typically when that happens, something bad happened. Or you're just going to have to make the investment in your business, which is also a write-off to you, so that you can see the money come back tenfold.
Yo, what's poppin'? You know what time it is? Your boy, Mr. J Hill. J Hill Podcast. We are in the building. Friend of the show. You know, anytime I say friend of the show, it's somebody that's already been on the show. My guy, a cool friend, associate / homie of mine. Tariq Collins is in the building.
What's up? What up?
Yeah, man. All is well, brother. How you been since the last time I talked to you?
Man, I've been chilling, man. Focus. Focus.
Yo, so talk to me about what you got going on and getting prepared for this tax season. Because I know last time we talked about business and things like that, but now it's like a different conversation.
100%. So taxes this year, we kind of center focus around our clients. So providing value in ways that just produce a better customer experience. So making sure we updating forms, pushing out information that's happening with the elections, things that's we doing a lot of conversations now around what should I do? What do I need to do to be ready, prepared? So it makes for a smoother transition when the IRS opens up in January.
So, bro, I got some questions. I wrote down some questions because I was like, because I got some questions for myself as well.
Right.
So first of all, the one thing that as I was like preparing for this interview, I was studying is different type of like, what is it called? It's different type of like business tax types, I guess. Like an LLC is a tax type. Right. But then you have something like an MLLC.
Okay.
And then like a S Corp and like a C Corp. Can you explain the difference between all of the tax
For sure.
types?
So typically most people are just walk from the bottom up, right? So most people do sole prop. Sole prop is like, hey, I'm just doing business in my name, right? So I'm Mr. J Hill, operating as Mr. J Hill. I got nothing set up with the Secretary of State. Simple enough. Don't recommend it, but simple.
Okay.
LLC stands for Limited Liability Company, right? So we actually went to the Secretary of State website and formed a business, Limited Liability Company. You'll have something that'll have your name. So like Eagle Financial Group, LLC. And then typically those are single member or multi-member.
Oh, okay.
Right?
That's what the M is for.
That's what the M is for. So single member means it's just me. I'm the only owner of the business. Multi-member means it's at least more than one person who owns it. So it could be me and you. It could be me, you, and 2 other people, right? And so that makes it multi-member. Multi-member automatically forms what's called a partnership business.
Okay.
Automatically. Then you have S Corp. S Corp stands for Small Chapter Corporation, meaning I just took my LLC, or I just took my LLC and said, hey, I want to be taxed as a small corporation. And so it allows me to do separate tax returns. So my business will have a tax return, and then I'll personally have a tax return, and I'm taxed as a small corporation, meaning the taxes flow down to me. And then there's C Corp. C Corp is your big corporation. So typically when you think C Corp, I would just think public company. Any public company, Apple, Walmart, you want to think C corporation. So that allows you to, you got a separate business. And this is where people say, oh, I might get double or triple tax because the business pay taxes itself.
Mm-hmm.
Then you as the shareholder pay taxes on dividends received. And then if you are a C corporation, you're going to be on payroll. So now you got the W-2 that you're paying taxes on as well.
Now, I know we said Apple, Walmart, things like that. That's a C corp. Give me an example of somebody that I might can talk to personally, or somebody that I might know that might have a C corp. Yeah. On a smaller level.
100%. That's a good question. Without actually knowing all the ins and outs about his business, but from somebody like him, 500, I would have a C corp.
Wow.
Just from the appearance of it, this make it seems like, and like I said, I don't know his net worth, none of that stuff, but if we're bringing in millions of dollars, the C corp might be the best option. Number one, you get to maximize benefits from the shareholder and employee standpoint, and number two, you're gonna pay cheaper taxes because the corporation pays the taxes on itself. Right now, it's at 21%.
Okay, but why that and not an S corp? Because I was under the understanding that the S corp gives you more benefits as well, and then I guess it's like, I don't want to say never, but like we was just talking about, my friend said he got hit with an audit, but like an audit, but an S corp, like it decreases your chances to get hit with an audit by like 70-something%.
100%. So let's break it down. So the reason that is because if you just have a limited liability company, LLC,
Mm-hmm.
what's happening is when you file taxes, you're doing it on a form called a Schedule C that's attached to your personal taxes, the 1040. So so that means if I do your personal taxes, I'm gonna say, hey, what's the business name? What's the income? What's the expenses? And I'm doing it on a form called a Schedule C. The reason why that gets audited so much is because most people use the Schedule C to commit fraud. So this would be like I'm putting down expenses on my Schedule C so I can draw down my income so I can get a refund or don't owe as much. And so that's why those are highly likely to get audited, because that's where the most fraud happens.
Mm.
Now, when I go S corp or partnership, it's less fraud in there, and it's less. The reason why it's less audits is because the IRS really haven't put a lot of funding behind those departments to educate themselves on checking out those taxes. However, that's changing. But is less likely to be audited because you're not doing business on the Schedule C. So now my S corp has its own tax return that goes on 1120S, and then I get a form K1 similar to like a 1099 or W2 that goes on my personal taxes, which I file for.
So with the S corp, I was under the understanding that I can have multiple LLCs under this one S corp.
You can. So when you do something like that, you will be creating what's called a holding company. I like to look at holding companies almost like investment companies. So this will be the company that I use to, if I need more than one business, this company will own all these layers of businesses that I have.
Like what? So for example, I have Honest Royalty LLC, right? That's basically just J Hill podcast, and I produce content. I get paid the same one as LLC, right?
Right.
I could be doing consulting, I can be doing recording, I can be doing podcasting, I can be doing merch or whatever.
Right.
So would the Honest Royalty be like the S corp, and then I should break down every business that I do individually as a LLC?
Well, you can. It often depends on what's the goal of, like, what are you trying to build out, right? So, for example, with that, you can do it like if that's the main business, right? That's like never going anywhere. But then outside of that, you find additional revenue streams that could possibly have its own business and LLC around it. Then I would do that. I would make that your what's the name of it?
Honest Royalty.
Honest Realty, or I would make that one the LLC, which will act as this holding company, and you can make that S corp, and then any other business you can then have it own. Or another way would be you automatically create a holding company or a management company or investment company. They're all kind of the same terms interchangeably. That owns every business that you do. For example, I have a business called CWM that owns Eagle Financial Group, which does taxes. Now, CWM, only activity it has is based off the activity that the other businesses has, because it's the investment business that owns every other venture that we'll do. So when I get ready to like coming up, we're getting ready to start buying accounting firms. So when I get ready to do that, the business that might do that in partnership with somebody or to just go out and do it might be CWM versus Eagle Financial Group.
Why does that matter? Like, explain that to me, because right now I don't have an S corp.
Right.
I just have
LLC.
Honest Royalty LLC, right?
Right.
I just have my LLC. And I do everything, and then at the end of the year, I just file my taxes on that one LLC.
Right.
What is the benefits or, I guess, takeaways of why I should or shouldn't do that?
So 2 reasons. One is the LLC. When you go to LLC, that means we're probably making a decent enough money to where we can pay ourselves. If we get to the point where we can pay ourselves, and that could be as low as, let's call it $40,000, as low as $40,000 or up from there. We get to save on taxes because on the LLC, you're hit with the self-employment tax of 15.3% on top of ordinary income tax. So what that means is if let's say I'm making like $80,000, I think my tax bracket will be somewhere like 20%. Let's call it 20% on the conservative side. And I have an LLC. So I'm making $80,000. Most of that is with my LLC, right? So I'm going to pay, let's say 40 of it is with the LLC. I'm going to pay 20% on top of 15.3% on my overall $80,000 because of the tax bracket.
So 50% basically?
Almost, right? So I'm gonna pay 20% plus 15.3%, which was around 35%. Right? So when I do S corp, what happens is I get to save on the 15.3%. The kicker though is you gotta be on payroll. And when you on payroll, the payroll taxes you would then pay, they become a tax write-off. They're deductible. So you save money overall with that. The second reason is asset protection. You want to get an entity that layers you and protects you from outside threats and creditors, basically. And so it doesn't, and it also, probably a third reason will be conduct some form of privacy, right? But then, privacy and asset protection gets a little tricky on how you kind of see it. So a lot of people might tell you might hear online like, yeah, get this company, hide your, protect your assets, this, that, and the third. And it does, but it still layers to asset protection.
Okay. Wait, so, bro, this is a lot. So, I know that they say if you make anywhere over 60,000, then you should probably get an S corp. That's correct.
Right.
All this money has to be documented though, right? Because a lot of times, 100%. Like, and I want to have this conversation from my level and not from the research and the people that make, I want to have it from my level so people can relate.
Yeah.
So I've made 6 figures from my I don't even want to say podcast, but from me as being a LLC or just being a name, right? I don't necessarily, I wouldn't say if that was from one entity, it was from multiple things, right? But a lot of times I'm getting paid via Cash App, I'm getting paid probably, I don't know, cash or Zelle, right?
Right.
I'm not having all of my things together. Like, how do I show the money that I'm making for IRS? How are they able to track those things? Explain to me about those things.
So this is where we got to get into the foundation of business. Business doesn't work unless we absolutely know numbers, right? And so you need bookkeeping. So either you hire somebody for bookkeeping or you do it yourself.
QuickBooks.
Do it yourself would be QuickBooks, and you can do it if you want to figure it out. Or a simple Excel. I would highly recommend QuickBooks. It's not that difficult, but once you get to the point where it doesn't serve you to do it, then hire somebody who's an expert in doing it. Because showing the numbers tells your business story. Just like you said, the next step will be stop using all these Cash Apps and Zelles and all that stuff and do official invoicing. But it's not a deal breaker, right? Because all that stuff is still connected to the bank account. So the more we're dialed in on bookkeeping, the better we're able to keep improved documentation, especially for when you get audited. Because when you get audited, IRS is going to look, they're going to say, prove this expense. One of the best ways is to show that you're actually doing business by actually doing bookkeeping versus, I got a statement over here, this and that. Now, statements can work and can help. Receipts are better always, but the foundation of it will be the bookkeeping.
Okay, so hold up, bro. Again, this is a conversation from my level, right?
Yeah.
$100,000 is not really a lot of money, right? Okay. Like at one point in time, I thought it was, right?
Right.
But cool, I'm making a little bit over, maybe. I gotta look at my numbers. I don't even know if I made that this year, but I made it last year, right? So when we're talking about that, I'm still paying all my bills, my expenses and things like that.
Yeah.
But I can't afford to pay somebody to keep up with this stuff. But yeah, the bookkeeping, I might overlook that because I'm so invested in being a talent, which is the part that's making me the money.
Right.
What do you suggest to the people that's probably in a similar situation?
Well, if you in a similar situation, you it's only two things that you can ever do in business. Either you're gonna have to do it yourself, or you're gonna have to pay somebody to do it. And so for me, I think that you have to look at bookkeeping as an investment. If I spend X, how much money will it help me generate and or keep? Because you're just the busy person, right? You, like you said, hey, I just made 6 figures last year. I got multiple different things that I made 6 figures, but you probably can't really tell me exactly how you made 6 figures or what avenue made you the most money. What's the core of the business? What's the thing that generated the most income? And then what did I spend to generate this income? Where did this come from? Or what expenses do I have mixed with business and personal that I could be getting rid of? These are things that a bookkeeper, and from you watching your money, you'll be able to see. Oh, I can cut this out. Do we even know if we jump into business? One of the first things we want to do is make money to be comfortable. So what's comfortable? I think that you should at least make money to pay your bills. Well, how much is my monthly bills? So do I know how much at minimum I need to pay myself to separate my income and expenses from the business, and then how much can the business keep? And so I think that you're going to have to come to the point where either you're going to put it off and it's not that important to you till it becomes important. And typically when that happens, something bad happened. Or you're just going to have to make the investment in your business, which is also a write-off to you, so that you can see the money come back tenfold.
Nah, fact. I think you're absolutely right. It's just, again, when you're not making that much, it's hard to see. And it's funny that you said that, because the dopest thing about my experience making the 6 figures in my business was I didn't have to spend nothing to make that.
Right.
And I'm understanding that if I could make that just at minimum, imagine when I start investing and spending things that I will make so much more. Another thing is, it's not really spending the money with a tax guy or business guy, consultant, whatever. Correct me. How do I say it?
For
a CPA or it's not really spending money. You're actually saving money, because this is money that you're not gonna have to kick out in the long run.
Yeah.
And then they will actually help you with preparation and things like that throughout the year.
100%. So when you spend money in that regard, it should come back to you like from value and actually money in the books, because the person's going to look at your books and they're going to be able to tell the story. So either I'm going to be able to figure out a way that we can increase revenue, or I'm going to be able to figure out somewhere where we can cut expenses, which also increase profit, or I'm going to be able to do both, which is really good. And then the amount of money that you're paying me, a small amount of money that's relative to the amount of money you might pay if you owe taxes. So you got to look at it from those perspectives.
Yo, are you a tax planner or a tax preparer?
Planner. So I'll say both, right? When I started as a preparer course, and then I elevated into becoming a planner. Naturally, that's just my natural way of thinking through things, being a strategist. So wealth strategist, business tax strategist, however you want to call it. But I plan. For
the people that might not know, like that's watching this, right? Yeah. Can you explain the difference between somebody that prepares your taxes and a tax planner, and why we should have either or?
100%. So a person who prepares your taxes will take all your documents. Everybody know them. They like, yo, I send my guy or girl my W-2, blah, blah, blah. I don't know what they do. And then they send it back to me. Typically that's a preparer. They're going to take your documents, prepare the taxes, tell you what you either going to get back or what you owe. There's no conversation around how did they come up with the number, especially if you're a business. Why do you owe? Or any type of recommendations to help you reduce the amount of taxes you owe. They're just going to simply prepare with no extra insight, typically. A planner is going to actually they're going to sit down way before it's time for you to do taxes and say, yo, you made, I don't know, $200,000 this year. You might have spent $150. You got a profit of $50. What can we do so we're not paying 20% on the $50,000 that you making? Can you invest in something early? Can you shift income? What is it that you're trying to do now that will benefit you in the future? That we can, or do we want to get into a retirement account? Whatever that looks like to help you mitigate your taxes, not evade them, but just like reduce them.
Mm-hmm.
And so that would be the difference between a planner. I think somebody who plans actually want to see your business succeed. At least that's how I think about it. So when I'm talking to a business owner, I'm looking at your business as if it was my business, especially because I want to see you succeed.
Now, give me baby steps, right? They say S corp. When you make at least 60,000, you probably should get an S corp, right?
Yep.
So now I understand. If I hit 60,000, maybe I should look at an S corp.
Yeah.
At what point in your career or stage in your entrepreneurship, when you say, "Yo, I need to start looking into having a tax planner instead of a tax preparer"?
That's a good question. I think you should always look from the time you start, and it might come up in small ways, right? Like. So a lot of us plan without really knowing that we plan, because you'll say, man, I'm doing my taxes. Like, what is it that you need from me to do taxes? That's a small form of planning. But I'll say the moment you start to take your business serious is the moment you need to get a planner. That's what I'll say.
But I can't afford this, bro. It's expensive. I got to pay these guys.
100%. So, that's a good question. Probably go on YouTube. But all right, here's what I'll say. From an income perspective, If you gross 6 figures, you really should start looking at a planner.
Okay. Gross 6 figures.
Gross 6 figures.
That's a good segue. A lot of people be like, you spend this money, I buy camera equipment or lights or whatever. They're like, you can write that off.
Yeah.
But when I hear that, right, not knowing anybody, and I'm still trying to understand it. So maybe you can explain to me. People say you can write it off as if you get the money back, like as if you're working for a business. You know, at the end of when you work for somebody, at the end of the year, you get like a refund check.
Right.
But I'm learning that in entrepreneurship, you're not really trying to get a refund check. You're just trying not to have to owe anything.
Right.
So when people say you could just write it off, it ain't like I'm getting the money back. It ain't like I'm getting it for free. I still pay for it. I just don't have to pay taxes on it. Yeah. Can you explain to me, like, why do people have this misunderstanding of writing things off? Like, what? Why? I'm sorry, messing up the question, but explain that to me, that whole notion of you can write it off. Like, what does that even mean? I'm still paying for it.
So I think it's two things. First of all, the write-offs mean that we're able to take a deduction on our business for whatever expense that we had toward our business that reduces the amount of money we have that's profit, because from the profit is where we pay the taxes.
Okay.
It's the simplest way I can explain that, I think. Where people have the misnotion of the mindset of like write off dollar for dollar is because we're used to receiving from the government rather than giving. So when I'm switching from I'm getting refunds, like my family and I, we normally get refunds. We ain't thinking nothing of it. I do my W-2. We got a couple kids, whatever. I'm normally receiving refunds every year. Now I'm switching from refunds to now I'm making money. Now I'm owing. And so we have a hard time grasping the fact that you will owe. So they think, people say write off, write off, write off. The thing is we're expecting to receive something from the government. When we become a business owner, it just puts us more in control of what we tell the government they should receive. And that's how you want to look at it. Okay. When you look at it from the cash flow quadrant, an employee, you don't get a choice in what happens with your money. I'm making X salary, $40,000 a year. Before I receive my net pay, I'm paying out Social Security, Medicare, federal taxes. That's the only thing you get to choose whether or not you want to do it by going exempt or not. And then, of course, if the company comes with some type of benefit, so medical, dental, all that other stuff, or retirement. Then I receive, after I paid all that, then I'm getting money. When you're an entrepreneur, if I do a transaction with you, you're getting all your money right now.
And I got to choose to pay.
And then so you're going to get all your money right now. Let's say, whatever the transaction is, I'm giving you $2,000. You're going to directly get $2,000. But now you get to say, well, I got $2,000 from Tariq, and it costs me $500 to get the venue. It costs me another $500 to get the camera, right? If a camera was that cheap, right? Another $500 to get the camera. Now I'm left with $1,000. That's my profit. So that's what I'll get to pay taxes on. But then if we do this early enough, you might say, $5,000, 5 different transactions of profit in $1,000, we got 5,000. Now I might say, well, I don't want to pay taxes on this money. How can I control and keep most of this money without giving it to the government? Now I'm going to look at, well, can I invest in a new camera because it's going to benefit me? Can I hire somebody because I need the help?
Well, hold up.
Mm-hmm.
If I invest in a new camera, and this is where I guess I get confused at,
Yeah.
because people say this, write it off. So what is it, frivolous? Like, I don't know the exact word, but they say it so loosely as if, again, it's free.
Right.
I'm still paying for that
You
new
are
camera.
paying for it.
So if the cameras that I have now works fine, I'm buying a new camera just so I don't have to pay taxes on $5,000. But now I still spent the money.
Right.
It's the upgrade, but I still spent the money.
Right, 100%. And so that's where planning comes into, because planning might be different for you than it is for me. And so if it doesn't make sense for us to buy a camera, then let's not buy the camera. So with that being said, I'm also an advocate, especially for Black businesses, as early as we can figure it out, is profit. Warren Buffett said $1 profit is better than no profit.
Mm-hmm.
So if we got to pay the taxes at the end of the day, then pay the taxes, because your business look better being profitable when you getting ready to do stuff that you want to do, like buy the house. Another thing would be what is it based off my business making profit that I can benefit from personally? This will be things like retirement accounts. So I get to shift income. It's still my money. I may delay it or I'm gonna delay the taxes on it, but I still get some type of control for it. So the planning will work, it will be different based off the business and what you're trying to do. Because I'm not a fan of like, we just going to buy stuff just to buy it. Because now you still got to either service it, or if we get a car, you got to pay the note on it. So if it don't make sense, then don't do it, right? Mm-hmm. If the glove don't fit, we must have quit. That's how I would.
Okay, because I understand investing things into the business, like maybe hiring people that can help your business scale, right? Yeah. But still, when you hire people, you make more money. Well, you got to pay them too, right? Yeah. But then even if it works, I'm saying, let's say it works. Yeah. You hire them to make more money. Yeah. You make more money, you got to pay taxes on more money. Yep. So it's like we in this rat race or this hamster wheel to try to save on taxes when we're still going to have to kick out the money somewhere to still pay the taxes. And that's when things like, you said maybe invest in like a retirement fund. Like, so I've been looking at something called a Roth IRA.
Yeah. So
that you don't have to pay taxes on.
Right, but with the Roth though, you have to be careful, because Roth is after tax, is an after tax contribution. Meaning, let's say I work at a job and my net check, right? So if I get every 2 weeks, I'm getting $1,500. That's out of that $1,500, that's what I'll contribute to a Roth, because I would have already paid taxes on the money I received.
Okay. But
Make sense?
Yeah, but when you're an entrepreneur.
When you're an entrepreneur, you not paying taxes on that unless you are on W-2. And so now the net money that you put yourself on, you put it into a Roth. As an entrepreneur, what you'll be doing is you'll be investing money in, and it'll be into pre-tax qualified accounts. So it'll be like your solo 401ks, and it'll be your solo 401ks, simple IRAs, SEPs. But those are things that if I put 20 grand into it today, I didn't pay taxes on it. All I did was put it into the retirement account. So it's going to reduce the amount of profit I have in the business. So I just took out, it's a $20,000 expense. Mm-hmm. However, when I get ready to retire at my retirement age and I pull from that account, then I'm going to be paying on the taxes then.
So you're still going to pay the tax?
Still going to pay the tax.
So there's no way to escape this?
There's no way to escape paying taxes at all. It's just a game of figuring out how to reduce our taxes as much as possible. Except for the fact that if I was to do this at a high rate, real estate will be the thing that will get you to mitigate paying no taxes based off how depreciation works.
Explain that.
So depreciation is the life use of a thing. So let's just say we got a camera. Let's just say with the camera equipment, the IRS says that the life use of this camera is 5 years, right? If the camera costs me $5,000 to purchase, I can depreciate that $5,000. So I'm gonna spend $5,000 today, but I'm gonna spread the expense out over 5 years. And it allows me to take the expense on my taxes, like dollar for dollar, to reduce my taxes by whatever that
Before you
5,000 is.
keep going, what you mean, like spread it out over 5 years? I can write it off every year,
Right,
for
for
5
years.
But I could.
But the 5,000, you take the 5,000 and divide it by 5.
Okay, so I'll write off $1,000 this year.
Right.
1,000. Okay.
Right, 100%. So every year you'll write off $1,000. So, and those are small numbers. So if you do that with the real estate, you have to think about it. With real estate, I get to get a loan to purchase a house, $400,000 house, and I'm renting it out. It's definitely got to be investment type home. So I'm renting it out or Airbnb in it, whatever it is. The life use of a residential property for real estate is 27 and a half years. So if I take a $500,000 house and divide that over 27 and a half years, you get to depreciate that every year for 27 and a half years. And that's just one house. So if I do 10, 15, 20 in any given year, whatever earned money I got, whatever profits I'm going to have at the end of the year, $100,000, $200,000, $50,000, we get to basically wipe that away.
And you could do the same thing with a car, right?
You can do the same thing with a car.
But they say that is like
5 years.
But they say that is like accelerated depreciation.
So it's not the car itself, but when Trump came in the first time, he put in the Tax Cuts and Jobs Act. With that, he allowed people to take bonus depreciation on almost like everyday stuff. So cars was the most common thing that came up because you can easily buy a $1 million car, or let me not use that type of numbers, but you can buy, let's call it,
let's say
$80,000,
okay.
$80,000 to $100,000 car, and you can bonus depreciate it, mean accelerate it, mean I'm gonna take all my depreciation up front at one time. So instead of spreading it out over the course of 5 years, I'm gonna take it right now. So I'm gonna be able to write off $80,000. Basically, is how it works. You could do the same thing with a house because you got to do cost segregation analysis. You can accelerate it. You won't be able to take the full thing, but you can break up the house in components and write off 5, 7, 15, 27 and a half years worth for the house.
So, but the first way sounds more beneficial. Why would I accelerate it instead of just taking $100,000 and spreading it out 5 years, and now I have 20, or I get 5 different cars. Now that's 5 times 20. Right. That's $100,000 per year for 5 years. Why would I accelerate it?
It just depends on your scenario and what's going on. So if my business, I'm, let's say I'm net 100,000. It's do I want to spend the money to buy a couple of different cars that's going to drop my income and all that stuff, and I get the bonus depreciated at one time, or do I want to spread it out because I'm looking to do different things? And so it's not right or wrong or no benefit or no greater benefit than not. It's just what strategy that you want to go with based off what you're trying to do.
Okay, let's get more into these misconceptions of like this taxes and stuff. You hear people say, like I didn't have to pay for this car, or like things like that. Right. And it's like, I mean, not necessarily, because okay. All right. Come to life moment. We're talking about high level people here.
Yeah.
If you make a lot of money and you're going to have to pay that back at the end of the year, then maybe you didn't have to buy the car, because instead of paying the government, you bought a car that eliminates you having to pay that.
Yeah.
So that's what people mean.
Well, yeah, but I think if we're going to dispel it, we might as well, just jump into it. That's marketing, right? And I really don't like the term because everything costs. And I think that we have to be clear, especially when we speaking to people who don't know money. Mm-hmm. When we don't know money, I think it's very beneficial for us to be clear. I'd rather be clear and somebody asks me what I mean than to try to be gimmicky just to suck you into something, right? So I don't like using the word, well, this is free for me because my offer is paid for it, or I use this money to get this money, so this is free, because nothing's free. Mm-hmm. Nothing's ever free. Even when we do content, it costs us to create the content, to put content out for you to consume it for quote unquote free, but it's still not free because you using your time. So nothing is ever free. So I never like using that. However, what people say is, well, I'll get it for free. Basically is X, whatever X is, this product or service that I sold, paid for why this toy or material thing that I bought. So they're going to say, you know, hey, learn how I got the G-Wagon for free. And so you're going to be like, well, how did you get the G-Wagon for free? And then when you dissect the video is I sold 20,000 offers at $97 that generated whatever that number is that helped me pay for this. So it didn't cost me nothing. You know what I mean? And so that's what people mean by it. But from a tax perspective, it's all going to cost you. Is nothing that's going to shift or be free in that nature, because it's going to cost you at the end.
I guess it's just different hacks.
It's different hacks.
I think 1 year, 3 years ago, Grant Cardone had he had end of the year.
Yep.
He made a lot of money, right?
Yep.
Millions of dollars.
Yep.
And he called, I guess this jet line and like, yo, I need a jet. I don't have a jet. He's like, yo, so he wired him $20 million, but to get the jet. But he did that so he didn't have to pay on however much, like I guess 120 or whatever, how much ever he made that year. So then he could, I guess, accelerate the appreciation or whatever it costs, however you say it. He was able to do that so he wouldn't have to pay that money to the taxes. That's a high level way of saving money through spending it.
Yep. Because it benefits him, right? So you got to think about it. And
then he can write off, if you get it wrapped, he can write that off as marketing.
Right.
Okay, my bad.
So no. I mean, 100%. So if I'm looking at my taxes early enough, I'm like, hey, at the end, somebody like Grant Cardone, I'm gonna profit, let's call it 10 million.
Mm-hmm.
So what can I do? Because we're gonna profit 10 million. If I profit 10 million, I'm gonna pay a boatload of taxes on that. So I don't want to give the government my money because I worked hard for this money. So I'm going to give them what they do, but I'm definitely not trying to leave a tip or nothing extra.
Right.
So for me is what can benefit me or the business, me as the owner or the business, that I can spend and use and basically be more in control of my money. And for him at that time, it was the jet. Because if I'm already traveling a lot, it makes sense to buy a jet just off you spending less time in the airport, hassles, bags, all this and that, when I'm on the go 24/7 because I got deals all across the U.S. So for me, it benefits the business. We got a jet, we get to write it off, and I get to take that, whatever that expense was, and it reduces the amount of profit I got, so I get to save on taxes. And I get to use the jet. It's a win-win.
So help me out, because that's high level, so I understand that.
Yep.
But for somebody that's not making that much money, I have to first know how much I'm profiting at the end of the year to be able to say, let me buy this and then write it off of my taxes.
Yes.
It's not just a random.
It's not. So it's definitely not a random thing. And you can never do, anybody who's telling you that I can give you a tax strategy and they don't know how much money you made, it's not a strategy for you, because you don't even know how much money you made.
Right.
So the first step is bookkeeping. Bookkeeping is the nucleus, the foundation, it's the heart of every business. Bookkeeping allows you to make effective decisions, when to make them, how to make them, and why you should make them. All of that stuff is answered in simply bookkeeping. So I guess it might just be beneficial to explain, I guess, how or what that is. So from the bookkeeping perspective, it's like, basically, I'm going to take your example. You said, you made six figures, multiple different streams of ways that you made it. So without me knowing, or just rattle off what's the different ways.
Recording, right? I guess like producing other people's stuff,
right?
So
you're actually you're producing somebody else's content.
Yeah, yep.
Okay,
like
cool.
For businesses and stuff.
Right.
So like consultants hire me to go out. I might video something, get it edited. I might take pictures. So that's a different way, taking pictures. Of course, the podcast itself, if I have guests.
Yeah.
YouTube, AdSense, merch.
Yeah.
Now I'm getting into coaching. It's damn.
So cool.
Yeah.
So just with that, right? So now you have to figure out exactly, and this is what bookkeeping helps you do. Because if I'm looking at your books, if you haven't done any bookkeeping, the first question I'm going to ask is, so you made $30,000 last month. How? Or where did each one of these pieces come from? Because from the bank perspective, all I'm seeing is total deposits came in at 30,000. But if I'm seeing like, okay, YouTube is 10, if Tariq paid an invoice and that was another 5 or whatever, or merch came in and that was another 3. Right now, from a bookkeeping perspective, I get to break that up. So your revenue is broken up into the different streams of revenue. And so you also get to figure out is, do I have different departments in my business, or do I have one department that offer different services in my business? See how we just in income is already generating the thought of how structured do I need my business to be?
And then, not to interrupt you,
Go ahead.
but if you can break that down, you can learn how to make more money.
That's what I'm saying. So if just with that one question, if I'm like, well, we just identified 6 different ways that you make money.
Mm-hmm.
So now you can see, well, could this be a whole department that we need to set up for? Could we see revenue here? Okay, well, the last 3 months we made over 50 grand over the past 3 months with just this one, just off merch. And I'm not really trying. If you're doing that many stuff, you're really not that intentional about what you're doing. Right. You just have different revenue ways of generating revenue. So you might say, hey, merch made over the past 3 months, merch made 50 grand. So what is it specifically we need to do with merch that produces a better quality of merch, a better experience with customer service so that we can end up generating more money? Oh, I didn't know that 40% of my revenue was from me actually producing content. So now you also get to do process of elimination. Do I want to keep all these things, or is this one thing that I want to focus on and say I don't want to do this? And that's just in the revenue side. Now I get to what's called, and I'm walking you how we do our bookkeeping process. What's called COGS, either cost of goods, or cost of services. So if on the merch side, if I made, let's call it $100 off selling a hoodie, mm-hmm. How much did the hoodie cost me for me to even sell it for $100? So let's say the hoodie cost me $20, right? So now I made $80 off this $100. That's a great profit margin because now you know the cost of your product. So now you need to say, hey, all merch need to be around this cost, which helps you do what? Shop for vendors. And if I want to make more profit, you charge more, but the quality of the hoodie probably needs to be more. So now you get to shop right for the right vendor to make sure that you're actually making a profit. Because it wouldn't do good if you paying, let's say the hoodie costs you $50 and then shipping costs you another $20, right? So now you done spent $70 to make $100. You only profited $30. Is that a good buy? No, because you're spending too much money than you're making. And so for services, it's the same thing. Service is a little bit hard to price out, but we can figure it out because it's like, what's the cost of me doing the service? Of course, there's value, there's time, but then there's people. So especially if, like for me, I might not be doing the tax prep. So whoever I'm paying to do the tax prep is eating up a cost of my service. So if it costs you $449 to get your taxes done, if I'm paying, let's call it $100 $100 commission on the tax preparer, then I'm making $300. That's a good profit margin for me.
Yeah.
So now you figure that out. So it helps me understand what am I buying, how much of it am I buying, and what's the cost in comparison to how much money I'm making another better decision. Then the third level of it is your operational expense. The way I like to look at operational expenses is what does it cost me monthly to operate my business what I can't do without? So what's the monthly upkeep of it? Do I have a space? Am I paying rent? Do I have employees that may not be tied to a service, but they do other things, administrative type things? Am I offering my employees benefits? Am I doing payroll? Do I have a software? Do I have to get computers or whatever that might look like? What operationally does it cost me? So now I get to see, especially the biggest expense we see, typically the biggest one you see is payroll and software. So the two biggest ones I normally see. It depends on the business. But payroll, if my payroll is high, now I get to see, well, I'm paying you $50,000 a year. I'm paying this person $40,000 a year, and you get to track the activity. How much of this, if I'm paying you 40, how much are you making me? Is this a good hire, or do I need to retrain? Did I do something wrong? Or how can I get more out of this person with paying less relative, right? And not saying that we, what's the word? Not saying that we exploiting services, but that's how you want to think about it as a business. Because in business, we in business to make a profit. Everything is about the dollar.
Yo, so wait, all right. I'm gonna take a quick pause real quick.
Yeah.
We on here because you plan and prepare taxes for people. You help them get their funds and stuff together. Quick question for you. On average, how much do you save your clients? Do you know?
On average, we probably save anywhere on the low end from $5,000 on the high end. Let's call it north of $20,000. It depends on the level of client.
And this stuff that you see that you documented yourself. Okay. What's the most you've saved somebody?
The most we saved somebody so far has been about 50 grand on a business that we did some small stuff on a business that was generating a little over $1 million. So, and it could have been something, it was, something simple. It could have been one thing that's something simple. With this one, just a shift from LLC to S Corp, because we're uneducated on how that works, right? Save them.
Wow, they say the biggest what's the biggest scam is what you don't know.
Yep.
Like that's the biggest scam.
That's the biggest thing. And a lot of times, I know we look at it like, oh, it's a cost, right? Like you said, like, hey, it's costing me, but really it's really investing, because if somebody like me spent thousands of hours to learn and know the stuff that I know, for me to look at your papers and say, and give you one or two things that's going to save you thousands, versus your superpower is doing podcasting, media, right? So you're going to look at something and say, yo, the camera's off, move it a little bit to the left, right? And I might pay you thousands of dollars for you to tweak that one thing, but that one thing might generate me thousands and millions of views or paid whatever, right? And so that's kind of how we have to look at it. Like, don't count my knowledge, just see the results, like you said, and what we giving back.
It's crazy, because speaking of that, as I'm preparing for the interview, I seen somebody say, like, speaking of scams, they was like, yo, mentorship is a scam. But peep this. They was like, because you're paying me to skip all of the steps. Yeah. Like, you're paying me to learn what it took me 10, 20 years to learn. Yeah. You're paying me to get that knowledge in a week or whatever, in a short amount of time. And it's crazy, because I used to think mentorship was a scam in other ways. Yeah. Because you can go on YouTube and all, like, right? So when he said that, I'm like, oh, wow. Yeah. And as I be doing these entrepreneur interviews, I just learn more. Another guy was like, well, yeah, YouTube is free. But, I mean, if you took advantage of it, then everybody be rich. Yeah. So I'm like, what do you think about that? Like, as far as mentorship being a scam in that way, like, I'm paying somebody to acquire all of the knowledge that they took so long to learn in a quick amount of time.
No, I think it's good. And I think, so I'm going to give it to you from an example, real life example I had. I had a, quote unquote, a bad experience with mentorship. Paid, thought that I was going to get X, didn't get it. However, it was probably the worst investment I made.
Explain that to me though, because I'm getting into mentorship too, and I'm super like serious on, I don't want to have no scam next to my name. So like, what was what did you expect? What happened?
So I expected to learn how to, I guess, lack of a better words, build a, stress-free educational company in a sense. And so
a stress-free
educational company, right?
Okay.
So with what we do from a service, and actually start to create money from creating an education around it. So teaching other people possibly how to do it, or direct to the business owner themselves for us to generate more leads. And then just from paying attention from what we were kind of pitched on what we're going to get, which if you was to go document for document, I'm going to give you X, Y, Z, you can say we kind of got that, but the results wasn't there in relation to what we thought that we were going to get. And I think the thing for me was I went down a rabbit hole of like, man, this person was wrong, X, scam me, this, that, and the third. But then I had to go back to principles that all work works. It's either going to work for you or it's going to work on me. And what I learned from that was how to qualify mentors. Because now you have to start to actually pay attention to the person that you're learning from. If a person's telling you, yo, yeah, I do this and hang out over here and I got this, a Lambo, this, that, and the third, that's one thing. But then if you start to pay attention to small stuff, the closer that you around them, the more you interact with them and start paying attention to they small life changes like, oh, okay, well, you live here or you do this or you saying this, but I don't see this. That's somebody you might want to, stay away from.
Or I think just understanding, my bad, I guess understanding the right mentor for you. Like one thing that, shout out to David Shands, I just went to his like, I don't know.
The conference they just did, right?
Yeah, right. And the thing he said, it stood out to me because I was like, wow. And I don't think he said it specifically like this, but what I got from it was, like, we all have like these insecurities about what we do or just feeling like we don't belong.
Yeah.
And he was like, if you know something, I think Donnie said it, if you know something, you can teach it.
Yeah.
So, but what happened is people try to teach you from A to Z when they only know how to get from A to B. But that's okay.
That's okay.
You can teach somebody how to get to A to B. Yeah. So just because like I might know how to start a podcast and help you, I might know how to start a podcast and make 6 figures off a podcast, right? Let's say 100,000, because 6 figures could be anything.
Yeah.
I can teach you how to start a podcast and get 6 figures from your podcast because I did it.
Right.
I should be confident in that. Now, as long as I'm not saying I can teach you how to create a podcast and make $1 million from it, because I never did that. That's different.
Right.
So I guess you got to pay attention to the people. One, mentors need to be careful with their wording. Yeah. But two, also, when you're seeking a mentor, you should know exactly what you want and go to that person and not have false expectations though either. Because if I'm saying, yo, I can teach you how to start your podcast, I can teach you how to start your podcast. Now, my number might not be what the next person's number is, and you got to decide if you want to pay that, but that's what I can teach you.
And that's the foundation of anything. Like, really, no disrespect to the mentor I had. What it was I ended up discovering like that just wasn't what I needed. That's something that I thought I needed based off what I thought I wanted, but it wasn't for me, right? So not that they don't help other people, it just didn't help me because that wasn't for me. But that's a good point because most people don't know what they want. And when you don't know what you want, right? Sometimes people say a confused mind don't buy, but I also think a confused mind will buy, because if I'm on social media, I don't know what I want, but I'm looking at all the stuff, all the lifestyle, all the toys and and nothing wrong with that. But if I'm seeking that, I'm going to go into these things with false pretenses. So now it looks like, no, this person scammed me because I paid $50,000 for a mentorship and I didn't get nothing. I didn't make no money. But then what work did you put in? And what did you really want out of this mentorship? And what are you trying to build? Most people can't answer that. But it's the same way in business, right? Like, I'm not going to do a plan. You're not going to come to me and we're going to cookie cutter a plan that I might give to this person, because that might not be something that's beneficial to you. So like for me, for instance, a scale tactic that we're implementing this upcoming year is buying up accounting firms. So for me to look like we're able to buy accounting firms, my business plan will look different from somebody who's not. Because now we need to show profit. We need to show high profit. I'm going to be willing to pay the taxes on that because I want to be able to have cash, not only to buy the business, even though there's creative ways for me to do it. It's just what I want to do personally. And be able to have the money to do what I need to do when I buy the business. Whether we can get the money or not. Because even if I go to a bank and say, or even if I come to you and say, listen, yo, I'm about to buy this accounting firm, let me get, 50,000 and I'll give you 5% of the firm. If I were you, I would want to know, like, do you even have the 50,000 to pay me back just in case my investment go down, right? Or what are you going to do? Do I believe in the plan enough for me to feel like, well, if I give you 50, I'm going to make 500, right? And so those are the type of things that I like to look at. And so it all comes down to what is it that you want and what is it that you're trying to build. And I think you're right. Like what Shans and them said, if I know how to do this, then I should be able to teach it. But you also got to know that you can teach, because not everybody who knows stuff can teach.
Yeah. This is a different conversation, but again, because I'm getting into it, how do you know if you can teach if you don't jump into it?
Well, you won't, but jumping into it might be like your first 5 to 10 people got a heavy discount, right? You ain't paying.
Yeah, that's what I'm doing, for sure.
You ain't charging nobody like, $20,000-$30,000, and you don't really have proof of concept. So either you might do somebody, you might end up just doing, let me just try it. And somebody you might be like, well, just give me X, at least for my time, right? And it's no big deal until you perfect that craft. I did it. When I as we built up our services, I started to do services just to see if this would be something that I would like to do. One of them specifically I remember was writing out business plans. So a friend came to me and was like, hey, we got to do a business plan because we're doing a partnership, family business. I'm looking to, and I want to do a business plan, because that's the type of person she was. She wanted to be like, I want everything on paper. I know I'm going to do A, B, C, D, E, F, G. So I was like, all right, cool. I'll do it. Right? Because she asked me, do you know somebody who do business plans? I was like, no, I'll do it. And I was upfront with her. Listen, I'm trying to see if this is something that I would like to do. I don't mind doing it. I'll charge this, or I won't charge. I don't think I charged her. I was like, I won't charge, but let me do it. Throughout the process, I hated it. I was like, no, this is dreadful. I did her plan in accordance to how she needed it done, right? I didn't didn't just dispose on it or didn't do bad work on it. But from doing that, I learned, like, I would never do this as a service. It's too much work. It's too much to go into it that, and I don't like it.
Yo, one thing that I noticed about you every time, the 2 times that we did talk, you came with the jacket, the shirt. In this, I guess, industry, as far as like African Americans, right? Yeah. Everything that we do, if it's business, even down to people being lawyers, we see people trying to be more hip and like more cultural as far as the way that they dress, right? Yeah. Dressing down and things like that. Why don't you take that approach?
Because that's not me.
Okay.
It's just not me. So I think people do that to attract more people like us, because we think that culture and streetwear is hip, and that's cool. But literally, if you was to walk in my closet, I probably got less tennis shoes than I do loafers.
Okay. And
so for me, I'm like, I'm gonna just be me, and you either gonna rock with me because of the knowledge I got versus what I got on, or not.
Okay. I was just curious. Yo, talk to me about the tax brackets.
Yeah.
Right. So you pay differently compared according to how much
you make. So the tax bracket is layered, right? So if you look at it, and I don't remember off the top of my head, but if you go from like 0 to 10% to 10%.
10% of what?
Exactly? 10% of the revenue that you make. So let's say somebody made 13. That's an easy one. Somebody made last year, 2024, $13,800.
Let's do 150.
150,000.
Yeah.
Right. All right. So 150,000. So if somebody made 150,000, what happens is your taxes is not an exact, like, I'm going to pay 20% on 150,000. You're going to pay 10% from 0 up to, let's call it 13,000. You're going to pay 20% from the 13,000 up to 80,000, right? You're going to pay you're going to pay 24% from 80,000 to 120,000. And that's how the layers work. So at the end of the day, somebody paid 150 for easy math. You might say, well, just save 20%, or 20% of it is going to be taxed. But it's layered in that sense. So
how are you able to know
what they do?
What they'll tax, or what bracket that you're in?
Well, you'll do it. So you'll have to break. So if I'm 150,000, which I would have had the chart. I'm $150,000.
Oh, so it's a chart for this. It says, okay,
right.
You tax at this number for how much?
Right.
Okay.
Right. So we probably, for easier, we can pull up the current year so people can see it while I'm explaining it. But if I made 150,000, you have to break up your income. So 0 to, let's call it 13,000, is taxed at 10%. So you'll take that number and then you'll times or 10%. Then from 13,000 up to his bracket. So from 13,000 up to 80,000, you're taxed at 12%.
Oh, so that's not just, I'm thinking like, or if you make anywhere from 60 to 150, you tax at this number. If you make anywhere from 150 to, no.
It's not, it's layered. So you got to break your income. That's where it gets a little complicated. You got to break your income up to see exactly how much taxes you're going to really be paying.
So, be real. Because all of this planning stuff, I can do this myself.
Mm-hmm.
How easy or like complicated would that get if somebody that's building a business and trying to manage and plan their own taxes for the end of the year as well?
I think it can get real difficult depending on how good you are as an owner, because what happens is of course you anything in your business you probably could do it yourself, but then we got to get back down to what is it that you're trying to build. So if the goal is for me to be a business owner, am I buying back my time? And how big of a business owner do I want to get? So I could manage my taxes, I could do the planning, I could run the cameras, I can do this. But then what's the better use of my time that's going to make us the most money? And so this is where you have to shift from, I'm going from a business owner or a hustler to a CEO.
Do you have a tax planner?
Yeah.
Damn. I thought I had you. Yeah. Okay.
And I just got one. I mean, if I'm being honest, right? Like I just got one because it's becoming, for me, because we offer the service, my focus is I'm 100% more focused on my clients getting results and my books and stuff be the last thing I'm gonna worry about, because I'm a service provider. But people are motivated by different things. The motivation for me was we about to start buying accounting firms. So I'm like, well, now let me get another set of eyes on here who's going to be able to help me, and I won't just do my basic, tax return at the end of the year.
Okay, another thing. So I'm hearing that it's different seasons. It's like 4 seasons of, like you could
for taxes.
Yeah.
Okay.
I thought it was just the end of the year or beginning of the year.
Yeah.
You pay your taxes.
Cool.
But no, it's like you gotta.
It's like different things going on, right?
What the hell is going on?
100%. So what happens is typically April 15th is the national tax day every year for when taxes are due.
Mm-hmm.
So it's all this stuff is layered. It's almost like the tax bracket. April 15th is a national, every year taxes are due. Mm-hmm. So when I say due, that means typically if I owe taxes, I have to pay them by the 15th, or we're going to start incurring penalties and interest for not paying and the interest for paying overtime, right? Mm-hmm. If I put an extension in, the extension lasts me 6 months. So I go from April to October to pay what's due, right? But 9 times out of 10, most people everybody think like taxes due April 15th. So whether you're getting a refund or not, you want to get your taxes in by April 15th. So business taxes, when I say business taxes, I'm saying partnerships. So this is multi-member LLCs or partnerships, and S-Corps are due by March 15th. The reason for that is because the business spits out a document that you need to take to your personal taxes to then file your personal taxes. So it's due before you pay your personal taxes. Corporations, C-Corps, they're due April 15th because you got a separate tax bracket over here. That corporation pays taxes. Mm-hmm. The S-Corp and the partnership don't pay taxes. It comes down to the person, and the person pays the taxes. Right? So that's when all taxes is due. That's that season. But now you got a season of taxes. So typically, anybody who's getting a refund, right, from all my tax preparers out there and those people who are used to refunds, you normally getting your taxes done anywhere between December 31st all the way up to, let's call it March 1st, because those are the people who typically get the refund. So these are all the people with the kids, you maxing out everything for refunds. So child tax credit, earned income tax credit, the school credit, all that stuff you're trying to get then so that you can get your refund fast. That's that season of people. Most people who owe will typically wait before they file their taxes. So they peak season is from March to April because they like, hey, I'm going to wait. I know I'm going to owe. Like, I ain't tripping about it. Put the extension in. The fourth quarters you're talking about, if I'm a business owner, you have to pay what's called estimated taxes. Because the tax system it's a system that's a pay-as-you-go system. So when I'm an employee, you don't have no choice in the matter. You will pay taxes quarterly or every check, and the business owner is paying those quarterly.
Okay.
As a business owner, now you kind of still don't have a choice in the matter, but you have to be intentional about paying quarterly taxes. So this would be like, I'm gonna pay into it quarterly, so at the end of the year, my tax burden is not as much. And so that's where you get into the different seasons.
Oh my gosh.
A lot.
Bro,
And we didn't even talk about the different types, because then you got federal, payroll taxes, sales taxes, state taxes.
I was going to ask. Yeah. So wait, it's funny. I had that. I was going to like.
Go ahead. My bad.
No, you good. I think tax types, because I have tax types and tax codes. But like different tax types. How many tax types are there?
100%. So tax types is, let's count them. So you got federal taxes.
Mm-hmm.
You got Social Security tax. That's you paying into Social Security, Medicare. Then you got sales taxes if you have a product and you got to pay sales taxes. Then you got payroll taxes if I'm an employee or an employer and I employ somebody, now I'm paying payroll taxes. So we have the 4. Then you have state taxes, which the state gets their money, different from federal. And then you can get down into city or county tax if I'm a business owner and I got liquor license, or if I got the register my business in my specific city or county or town. And then you have I'm at 6. Then you have property tax if you own a property.
Okay, yeah.
Then you got capital gains tax if I'm investing. And I think that's good enough.
God,
I think it's enough.
And you got to pay.
It might be.
You got to pay taxes at different times for each one of these.
Each one of them at different levels, depending on what it is. So let's start with the later, like capital gains tax. The easiest person to look at for that is somebody like Warren Buffett.
Mm-hmm.
So you might have heard the example of the CEO of Coca-Cola will pay more taxes than Warren Buffett will, and Buffett owns the stock in there. But that's because he's an investor and it's a passive investor. The CEO is actually earning income. So if the CEO makes, let's call it 10 million, he's earned that money because he's an employee, basically. CEO is an employee.
Mm-hmm.
Well, Warren Buffett might make 20 mil and still pay less taxes on it because his tax rate is different, because he's not actually working in the business. He just got money in there and getting a dividend. So it's called passive investing.
Damn.
Then when it comes to city, state, federal, typically state taxes are due when federal taxes are due. So March 15th, April 15th, October 15th, or September 15th if we put extensions in. And that's where you're paying the state. City taxes typically depends on the city or the county you in, and when you got to check with their tax schedule. 9 times out of 10, most people taxes are due between like October to the end of the year. Before January 1st, you got to pay to renew your business registration license or your liquor license or your all those things. Sales taxes and payroll taxes are due quarterly. So that's just like paying quarterly federal taxes. So every 15th of the month after that quarter, January, February, March. So April 15th, the first quarter taxes is due April 15th for that quarter.
So if I hire anybody, I have to pay that
quarter payroll taxes by April 15th for the first 3
But
months.
again, I'm just low level entrepreneur. Rob, pay people with Cash App.
Yeah.
I don't have contracts. They just help me. But at the end of the year, I still want to put that on my taxes.
Right.
I still have to pay that quarterly.
No, because if you just paying people, then now there's a difference between an employee and a contractor. So if I'm paying somebody like that and I'm Cash Apping, Zelle, we giving them cash because they provide a service, then they're a 1099 person. So the only thing you have to file with that is you just got to file the actual 1099. This tells the IRS that, hey, Mr. J. Hill paid Tariq $10,000 for the year of 2024. So they're going to expect to see that money show up on my taxes because you filed the form and you wrote the expense off.
Okay, that makes sense. Damn. It's so much, bro. And
good, though. Good conversation.
You get into the, I guess the tax codes are what you apply on the taxes to get deductions and stuff, or
Right. So the tax code is the laws wrapped around taxes, period. So Congress create these tax laws, which are then coded, and this tells you what a business can and can't do. It's just the laws of it, right? So you can look at the tax code, tax publications, and case laws to help determine what your business can and can't do for whatever it is that you're trying to do.
Okay. So let's get into the meat and potatoes. You're here. You want more clients. Like what? Explain to us, what are you looking for right now?
What am I looking for right now? Mostly here's what I'm looking to do. I'm looking to educate people around business so where they can grow their business to make profit, and we get to save on taxes in the meantime. So I set my firm up to service entrepreneurs first.
What type of entrepreneur though?
So
Because we are different.
100%. So
I make 120, 150, maybe 200.
Right.
You niggas out here making millions. 10,
Right,
20
right,
millions.
100%.
Which ones are you working with? You working with me? Can you work
Right. Yep. So I'm working with every level, and I'm working with all businesses. So my business, we're a business agnostic, meaning like I'm gonna take, if you a service provider, a product, you content creator, or you provide a service, right? We'll take you. And we have different packages at different levels. So like you said, hey, I may not be able to afford, like you may not think you can afford bookkeeping, but we got a package where you could just do bookkeeping, and that's all that you'll get, bookkeeping, and then we'll do annual taxes type stuff, or we could just do annual taxes, or we could do planning, or we could do accounting level services, or we can do CFO services, and we'll work with a business that's at least generated some type of revenue. So if you under $100,000, you probably just doing annual taxes, which we still do those. If you over that, you might want to start looking at, if you hitting $100,000, you want to at least start to look at bookkeeping. If we anywhere between 100,000 and $500,000, you want to at least start looking at accounting services with some type of limited advisory to it, because the goal would be, in my mind, would be to grow you from that point to at least $1 million. If you from $1 million up, you definitely want to start looking at CFO services. And basically that's chief financial officer services. So think big corporate, the CFO of Coca-Cola, but I get to have this person for my business, and it's fractional, so that I don't have to like W-2 somebody salary of $150,000, $200,000. I get to pay them a fraction of the cost for the same level of service that also helps me grow and scale my business.
So when you say fraction, like you get percentage now.
Well, you could do percentage. It depends on how the person want to charge. We do a flat fee, like it's this much a month, but fractional will be like, you might pay me $60,000 a year, but if you actually look up the salary of a CFO, their salary is $200,000, $150,000, $200,000, $300,000 a year.
Okay.
So now you get that same level of service in a nutshell for a fraction of the cost.
So you've actually been like CFOs of companies.
Right. So we provide the CFO services for companies, and we do it now.
Wow.
So I'm CFO of a few different people companies.
Wow. So they pay you what, how much do you charge for that?
So our lowest is around 5,000. So it's $60,000 a year.
And, $5,000 a month.
Right, 5,000 a month.
Oh, okay, but they can pay you the $60,000 up front if they want.
They can if they want to.
You ever got paid that up front?
Not 60. I did when I first started my business on my own. My very first client who paid me for bookkeeping services all up front at one time. It was the most money I had made in one given time from the start of my business, not even knowing if I would be successful or if I'm good at, if I'm competent or nothing. So I was like a teardrop.
I've witnessed that, and I wonder why. It's like we make the most money when we first start. I don't want to say that, but I feel like I've seen more money all at once in my earlier stages more so than now.
Yeah, now. I think it's because you're getting started. So you're eager to make money. You're in a hungry phase. And I think the more that you grow, we start to spread ourselves thin. And that could be from the shiny man syndrome, like, I want to get into this, I want to get into that, or money could also be the killer too, because now you making money, so you don't feel as hungry to get money because you feel like you got money. But that's gonna be a slow tire leak if you think like that. And I'm just coming from experience. I did both ways. coming from experience. I got into the shiny man syndrome where I'm thinking like, oh, I want to build this. I want to build that. I want to add this on here. Everybody else making money online. Let me do content. Let me do this, that, and the third. And not that I can't do it or don't enjoy it, but is that the best use of my time? Then I also was in a point where we made money like totally on my own, coming from my story, and you get complacent. So it's like, am I not doing enough touch points? I'm just sitting stagnant. So I'm still thinking that clients is just going to still rock with me, come back, and this, that, and the third, and I don't have to put no work in, right? And then that gets shattered because complacency, you start to go back. So if you ain't continuing to get new clients and add value to your current clients, you're not gonna grow.
Yeah. What do you think the biggest mistake as entrepreneurs that we make when it comes to taxes?
I think the biggest mistake is not facing it. Is not dealing with it up front. So, and that's across the board. So either how I mostly see it is people get audited and they'll get the letters and they'll sit on them. They're scared to open them. They don't know what's going on. I don't want to talk to IRS. This tax person might have did something, but I knew something was going on, but I just didn't respond. And so because we don't get ahead of it, it actually makes the matter worse because now the IRS has a process that they go through for audits. We're going to send a letter. We're going to ask you to do this. We might ask you to amend. If you don't amend, I'm going to look at it like you commit fraud. So now along the time that we're doing this, it's fees and penalties and all these interests being added on to what might have taken us 30 days to knock out. So when you're dealing with audits, it's typically about how fast you respond to it. The flip side to it is we making money and we don't get to the taxes part of it sooner. So I've had people literally who started a business and didn't even realize that their business would take off the way it did, made $500,000. And then when it's time to do taxes, it's like, well, okay, you made $500,000. This is how much you profit. You owe taxes on this. Oh, I don't have this money. I didn't know I made this much money. Surely we got expenses, so we don't have bookkeeping done.
Damn. Sheesh. That's crazy, bro. All right, so for the people that want to inquire about your services and hire you, how do they do so?
Sure. So you can go on eaglefsg.com. You can look me up on Instagram as Dr. Blaq Wealth, TikTok, Dr. Blaq Wealth. I got links in the bios. Typically, you'll book a call with me and we'll do what's called a initial conversation so we can understand what's going on with you and your business and what you're trying to do and figure out the best path for you, whether we got a service for it or whether we don't offer it or which service that you need. And then you in our funnel or in our process, so to speak.
This is good, bro. I feel like I learned a lot on this.
Yeah?
Yeah.
Got something to help your business?
Yeah, man. And I learned just I wanted to be prepared for the conversation, so I kind of did my own research. So I learned a lot doing that. I'm like, yo, this is a whole different. Somebody was like, man, you either pay me or you pay the government. It's like you letting them take your money, right? Like you pay me, I'm gonna help you so they don't have to take as much, right? So we could limit the amount that they take you. Or it's either you gonna pay somebody or they gonna get their money regardless. So you might as well pay somebody.
And it's like not paying me, I feel like you almost pay twice.
Yeah.
Because you're gonna pay the taxes and you're gonna pay the ignorant tax because you could have avoided that or you could have, you know what I mean? And you're gonna feel it because now it's like, it's stuff becoming too much. And sometimes that be the thing that help business owners make decisions. I had a call the other day, and we working with the young lady. She's out of Ohio, or whatever, home health care business, and we're having a conversation. She's like, "Well, do you do this? Do you do this? Can you help me with this?" I'm like, "Yeah." And we ended up finding out, like, well, based off where you are and where you're trying to get to. For me, the package might be the CFO services, right? And I'm quick. Like, I don't want to recommend something that you're not ready for. Like, if you're making money and can't afford this service, it's okay to just do this. And so she was like, the question she asked me was, well, the money I'm paying you, will I be able to write that off? Or is that considered a write-off or a deduction? And I'm like, yeah, because you're paying me for a service for your business, right? So it helps people when you making $700,000, you already looking to save on taxes. This is something that you didn't think of. So not only does this make you have a deduction, so you $60,000 less money, and we're gonna look for more ways to help save more money. You got to think about a $60,000 investment probably saved you $150,000.
No, that's facts, bro. This is good, bro. Damn, man, this is good. Was it anything that we didn't mention that you wanted to bring up?
Only thing I would say is as business owners, we got to start to get serious about our business. And I think that's the number one differentiator. You heard me say it a couple of times, like, what is it that you're trying to build, right? If you don't know where you're going, anywhere you end up is fine, right? My mentor told me that. And so, and I stand by that, because if you don't know where you're going, you just out here making money, and I've seen it. You end up on the IRS $80,000, $100,000 just off what you supposed to have as profits, because we don't know what we're trying to build. We're not keeping track of expenses. We don't keep track of income, so we don't know exactly how much money we want to make. We don't know where it's coming from, so we don't know what we might want to keep, what we might want to get rid of, what we need to perfect, how we want to do it. And I think we are moving into that as we get past the phase of, and I think that's where the big scam culture of mentorship going. I think we're getting past the phase of, I'm looking to make money for freedom, and you still got a large population of those people, but a lot of people who are successful are like, how can I build a media company? Not just a podcaster. How can I build a media company? How can I build a conglomerate? How can I be the next Elon, Jeff Bezos with this company that I'm doing, Robert Smiths of the world, right? And the more we get serious about it, the better decisions we'll start to make.
You know what's crazy, man? I heard somebody say, I don't think it was the whole college is a scam conversation. But the one thing they did say, it was like, you can't write college off, but you can write a mentorship off.
Yeah.
I was like, sheesh.
Yeah.
And whole time, a lot of times the mentorships is helping you get closer to your dreams or your goals when it comes to financial or just learning than college.
Yeah.
Now, I don't subscribe to college as a scam, because I've been to college and I know it's way more beneficial than $1. Way more beneficial than that.
Yeah.
But that's a different conversation. But the way they broke it down, I was like, that's true.
Right. But both is like understanding that at the root level, life is about people. And so we are always in the people business. So if I go to college, what relationships am I building with the people that are my classmates who will go off and then do something that I can help add value to their life, and they can help add value to my life.
That's it right there. College could be $500,000, and that's it right there. I ain't gonna lie to you.
One relationship can change a whole lot of stuff.
That's it right there.
One relationship can change a whole lot of stuff, especially if you're coming from a place of you don't have no access to nothing, right? And so mentorship is the same way. Typically, when you're paying for mentorship, you're getting access to the person who has the knowledge. However, there's more than likely more than one person paying this person. So you also got access to the room of people
that's willing to pay like you're willing to pay.
So now you're masterminding with the same like-minded type of person, at least from an investment standpoint, in this same room. So one relationship could change the amount of money you spent on a mentorship. You can get that back. And so I think that we have to learn that we have to really make deposits into people and be careful about how much we allow people to take withdrawals from us.
That's real.
So
this is good, bro. I appreciate you, bro.
Yeah, man.
This is good, man. Tariq Collins. For the people that don't know how to follow you, one more time, tell them how to follow you.
Dr. Blaq Wealth on Instagram, TikTok, and follow me there.
This is good, man. J Hill Podcast. It's a wrap. We out.